rule. Now, of course, the earnest deposit is already non-refundable by then, and then you go ahead and decide to purchase. Go ahead and purchase. Otherwise you lose the deposit, right? The 10%, which is the standard deposit. And now, okay, Mr. Notary, I am feeling comfortable now. I have seen the reports; they are favorable, and I'm happy with them. Let's schedule a closing date, right? In that meantime, also, you can open escrow if you are to use escrow. If you don't need or want to use escrow, you don't have to. It's not mandatory, but it's always recommended for having the monies being safely kept by a third party that is controlled by the government in Costa Rica. So we set up closing date, and then the two attorneys exchange the draft of the closing documents. In this now particular case, and I was talking to Susan about that, because it's on a notary book that goes recorded into the National Registry, it's got to be, excuse me, in our official language, which is Spanish. We also translate those documents in English so that you can actually review it, despite the fact that I read it in English when we close, but you want to read it calmly. Because at closing, you're nervous, you're excited. I mean, wow, I'm buying my dream house in paradise. So you may not pay that much attention to details. Rather, if you get it a day or two in advance, so that you can go over it and ask questions as needed, comment as needed. So we transfer. Oh, Francois, merci beaucoup. So we transfer the property and pay the transfer registration taxes and stamps, and submit this onto the National Registry. And in 8 to 15 days, you got the property title on your name that you can go online on the web and review, and it's duly titled to your name or your company name. And then you get to choose the drapes and the carpeting and enjoy, So it's pretty basic, simple. And like my partner said before, I mean, you will get this presentation through Francois by email. And please ask as many questions as needed by email, and we'll be more than happy to answer most or all of them. Okay? Thank you very much. Yes, young lady, go ahead.
The holding of the books.
Yes.
So why do people hold them at the lawyer's office as opposed to the personally?
It's a matter of choice. Okay, it's a matter of choice. A lot of people prefer to have all legal related documents at their attorney's office. Okay? Corporate bylaws, legal books, so on and so forth. Some people say, you know what? I'd rather keep them in my safe at my house. That's a matter of choice. Sometimes, because you do need, and especially foreigners that don't live all year round in Costa Rica, if there is something to be done on one of the powers attorney Federico explained earlier, and it's on a company name, the property, then we do a shareholders assembly on the books, and we insert that on the lead book. Let's say you're doing a remodeling or an addition to your house and you're in Canada, so we need to grant a special power of attorney to the architect or the builder. So we do a shareholders assembly, and we FedEx the books to you, to Canada. You sign it, you send it back. So, it's easier to have them here in the event of any eventual situations like that. Closing costs. It's there are two ways to close on a property. Sometimes the property is already being owned by a corporation, so you can buy the shares of that holding corporation, and you only need to pay the legal fees to the attorney, which is 1.5% cost on legal fees. If you are buying the property itself, then you need to pay registration stamps, which is roughly a 1% because it varies, it's a scale, depends on the price. Transfer tax is 1.5% flat on sales price, and legal fees, which is 1.5% to the attorney. You know, obviously, I mean, those are the closing costs for the actual closing. During due diligence, many things may come, for example, to incorporate the holding company if you want to incorporate. Due diligence, there's a cost of that to be added at the closing. And other things that may come as needed in a case-by-case scenario. But roughly it's, 4.5% on closing costs, okay? Yes, sir.
My question is regarding succession planning.
Yeah.
And trying to understand how having a will set up with a lawyer and paying them a certain percentage, after death, or setting up a trust with trustees. Can you explain to me what's the...
There are many ways, mostly 3 or 4 to protect your inheritance and your heirs in an unfortunate event of deceased. One is to create a will, in which case the heirs will have to contact a lawyer and execute that will through a legal process, which is either judicial or by a notary. Okay, depends on a case by case. If there's only 1 or 2 heirs, it's better with a notary. If we got, different sons, daughters, in-laws, and so on and so forth, and they don't agree with the partitioner, then it's better judicial. Unfortunately. So a will is one way to do it. If you don't have a will, it doesn't matter. It's a little bit of a more hassle for your heirs to get their inheritance from the deceased person. A little bit more tricky and complicated. Nonetheless, doable. It takes a little more time. If you don't have a will, you can have a trust which is basically very similar. In Costa Rica, it's very similar to the will. Okay, very similar. And there is another more practical way that I always try to encourage the people. In the event that you keep the books yourself, you name the beneficiaries of those shares in the books. Okay? If anything happens, you keep it on a safe. You tell somebody, your friend, your parents, your brother, hey, the books are here in this safe. This is the entry code, and these are my assets in Costa Rica already been handed out, the shares to my daughter, son, whatever. So that in that case, that son or daughter comes to us and say, well, my father passed and he left me the shares of this holding company that owns this property, and we need to share the board of directors of the company. Okay, so now Papa is deceased, unfortunately. Now we put the son as president of that company or a manager, depending on an LLC of SA, like Federico explained, and we changed that on the registry. And because remember, the holding company is still the owner of the land. It's not the individual person. Like Federico said, to Costa Rica government, individual person and entity. That's the 2 types of persons that exist. So the owner of our property is the person called entity, right? So those are the 4, in general, basics, types of protecting your inheritance for your heirs.
Thank you. And the percentage that you do process this type of work?
What percentage of?
Is there a percentage of the payment for?
The payment, it's a case by case on the value of the inheritance. Yes, it's around 1%, 1.25, but it's and the reason I say this is because somebody only have a small apartment may not be worth to have a will, but you have this beautiful $3.4 million home that was shown to us earlier, then you definitely want a will, very explicit to protect that big investment. So.
The number is the will, correct?
Pardon me?
The number, that's the will?
Yeah, I would do the will for sure.
When you say a will, it has to be done here. You can't go by a will that's from Canada.
Let's say you have a will in Canada, okay? And you need to enforce that here, which of course needs to go to apostille, to the Costa Rican consulate, brought back here, authenticated and notarized, translated, recorded in the National Registry, and then, so, I mean,
So do the will here.
do the will here.
Yeah, your will.
Any other questions?
But, okay, about the will, what if we have a will already in Canada and we purchase property here? What do you?
It works. That will covers any assets that you have, Canada, Costa Rica, Mexico, anywhere, you know? It protects your assets, that Canadian will here. It's easier.
It's just more complicated?
It will complicate things.
So we're gone.
So you keep the Canadian will to protect your Canadian assets, and you get a will for the Costa Rican assets.
So you just get it to?
It's much easier that way. Yes.
I have a question. How come Papa always has to be the one to die first?
Because my dear mother taught me that way. So that's. No. Well, thank you. Now we're going to give the mic to Christian to talk about immigration, amongst other things. Thank you.
Thank you.
Thank you very much.
Your birth certificate, your police record has to be federal police record. If you're married, your marriage certificate, and if you have children,
Okay, thank you. Okay. Am I good, right? Am I good?
I think so.
Okay, perfect. So this is very important for you to know. What else we need from abroad, depending on what status you are applying for. For instance, people that already have a pension, that are retired, with a letter saying that you have your pension and you're gonna receive a monthly installment of that pension, that letter has to come also with the apostille or authenticated by the consulate of Costa Rica in Canada. So those are mainly the documents that you need for opening the application process of immigration. So what kind of statuses that we have? For retiree, we have a pension. We have for students, for teachers, researchers, internships. We have for executive. If you have a corporation, you can apply with that corporation as an executive of that corporation. For your spouse, we have, or husband, a digital nomad also. We have the residency for investors, which is one of the ones that people ask more nowadays, because if you do a real estate investment of $150,000, you can apply for residency, which is anything around here costs more than that, right? So, yes, go ahead.
When you said 150,000, is it per couple or by person?
No, it's not by person, it's by the family household. So, if you apply, you in your name or in the name of the corporation, in your case, your husband and children can be included in the application. One thing that is important to know is, let's say you buy a house for $150,000. Husband and wife form the corporation, and they want to have 50% each of the shares of the corporation. You cannot apply that way, because will be 75,000 investment one and 75,000 investment the other. So it has to be one person investment 150. So what we usually do is we put one as the owner of the 100%, and when we file the application, we put it 50-50, that way, okay? So this residency for investor, you have to, well, of course, do the investment of $150,000 and have the transfer deed registered in the public registry, and have the transfer, when it's registered in the public registry, you have to register in the municipality of the county where the property is located. You have to do those two registrations, because immigration office will ask for those two registrations. Well, that is, of course, for taxes purpose, you know, because if you don't register the real transaction price of the property in the municipality, you don't pay the taxes for that amount. But if you register, you have to pay the taxes of that amount. How much are those taxes? 25% per year, and you can pay it in 4 installments every 3 months, okay? Or you can pay it at the beginning of the year, and the municipality usually gives some discount on that. So that's to be keep in mind. Let me see. Rentista is another status. This status is really easy too. You deposit in a bank account in Costa Rica $60,000 for 2 years, and each month the bank gives you back $2,500. For living expenses, you need more than that. So it's something that if you don't want to do that real estate investment and want to come to Costa Rica and with a low investment, you can do the rentista. Also, what people have done is they do the deposit, and when they give the money back every month, they don't spend the money. So when they have to do the renewal, they already have that money in their pocket. So do the investment again, and then you can apply for the renewal of that status. Something interesting is you get permanent resident after 3 years, okay? So you do one renewal, and the next renewal you ask for a permanent residency. So you don't have to prove your original status, meaning you don't have to prove that you have a property anymore, or you don't have to prove that you have the deposit in the bank. Or if you're married to a tico or to a tica, you don't have to prove that you're married to a tica or a tico anymore. Okay? Digital nomads. This came in the pandemic. So if you can prove that you receive your income or salary somewhere abroad Costa Rica, but you want to work from Costa Rica, you can apply for this one. And the thing is, the digital nomad status is only good for 2 years. So you apply, you get the status for 1 year, you renew for 1 year more, and then you cannot renew it anymore. So that is important to keep in mind, because it's not necessary to, forever. The good thing is you can include your family in this status too. I think that's it. Any question? Please let us know.
What was the income requirement of digital nomad?
If you're single, $3,000. For the whole family, $4,000. A month. US dollars. Sorry, that's good. Yeah. And Tico dollars too. Yeah, tell me.
Do you have any idea about the law that supposedly was passed but wasn't passed about bringing in your shipping container and 2 vehicles?
Yep. Yeah. That was something. That was something. The law, the original law, passed more than a year and a half ago. I think it was July 2021. And then the decree, the regulation of that law, a month ago. It was unbelievable. So everybody was really not happy about it.
What happened with the law? Sorry.
The law was, the bill was passed in the Congress almost a year and a half ago.
They have 2 babies.
And then that law need a regulation. Okay? That regulation passed 1 month ago. So it was a big gap between the law and the regulation. So everybody was unhappy about it. So that finally happened a month ago, and that allows you to bring 2 vehicles. You can bring 2 cars, you can bring a car, a motorcycle, you can bring a car and a boat, you can bring a plane and a boat, a plane and a car. You can mix it anywhere. And you can bring all your furniture, everything for your house. And if you have a special equipment in your job, you can bring that too. The tricky thing about that, and we are unhappy about it, and we are doing a lot of discussions with the government, is that you can apply for those exemptions until you have the residency granted. So again, 12 to 18 months. So you buy a house, but you need to wait more than a year to bring your furniture. That has no sense. Makes no sense. But that is how it is at this moment. We are trying to have the government understand that that is not the way to do it, because what is the trigger for the extension? Doing this investment. So if you do the investment, you can do the extension. That is by principle, right? But we are fighting to the government to make that change. But that's how it is at this moment.
It's better by the furniture and everything here.
Excuse me?
It's better by the furniture here.
Well, might be.
Like I buy a car here, I pay $2,000 new car, I pay $2,000 more if I buy a car in Colorado.
Okay, so.
Because you pay more for taxes, to shipping, everything.
Yes.
And the headache.
There's more programs about the law, right?
Exactly.
So basically, the law just passed, right? It's a bylaw to the law, but it has all these weird things. One of them is, for example, if you think about cars that you have exempted, it says that you have to keep it for 10 years. So like, you're gonna save some money on the upfront that you're going to lose in the back, right? I mean, there was a law in the past for like diplomats and consulates that you couldn't bring cars exempted. If they sold it, you had to pay the taxes. But this one doesn't even say that. It says that you have to keep it for 10 years. So it's gonna cost more to bring it cheaper, and then you cannot even sell it. And then there's another thing that they included down there that is even worse. It says that you have to keep it in your personal. Which again, so it's creating for us as attorneys a different problem, which is inheritance issues that you were avoiding to the company. Right? So at the end, you may end costing you more on those things. I can understand that in furniture and this and that it could work. But I don't see that it being worth it for cars or movable assets in here.
I buy everything here because that's painful. And like for the car, I pay only $2,000 more. The one has the new car for now, I can buy the car over here.
You can put a business buying advisor, furniture buying advisor.
If I buy the car from there, I need to pay like $10,000 more. If I buy it here, I have to pay $2,000. And the furniture, you can go a nice store, buy everything in here.
So speaking to residency, I was wondering if you could touch on income taxes. My understanding is Costa Rica is a territorial tax country.
Correct.
So if you can elaborate on that, I don't think many people here.
Okay, yeah. So Costa Rica tax is national tax. So whatever money you make abroad in other countries is not taxable in Costa Rica. That's what your question.
Transfer it from a Canadian account or an American bank account here. Costa Rica cannot tax that income tax.
No. No, because what is taxable is whatever income you generate within the country.
Yeah, see.
If you generate that income abroad, it's not taxable in Costa Rica.
Yeah. So if your tenants are renting from you here, that's local income. But if you're earning income from outside of Costa Rica, tax free. See.
Correct. Thank you for that question. It's a really good one.
Christian, what about if you're running your business, your rental business, but you're having income go to a Canadian bank? Now, is that not Canadian income and it has nothing to do with...
Well, that is a Costa Rican income because it's generated here, but that is a question to be asked to a Canadian accountant.
Well, when I brought it up to my Canadian accountant, how he put it, he said, Sue, if you're going to do it that way, then we're going to add that to your income here. He said, otherwise, do it in Costa Rica, and then we have whatever the term is between the two countries to make sure we're not double taxed.
Yeah, correct. Okay.
Canada is not a territorial tax country. Canada will tax you globally.
Correct.
That's the difference.
But they don't do it twice.
No.
Like, it's not. So whatever Costa Rica has taxed, then if I'm at a different income bracket at home, I'll get taxed on the rest there.
Correct.
That's what I understand.
I'll share my experience. I just went through it now. What you do is you get a beautiful report from CONEXA Partners and you email it to your Canadian accountant. They see the difference and you top it up because Canada is more expensive.
Yeah.
Or US as well.
Okay.
Same for Canadians investing in the US. You get your report from the IRS, you give it to the CRA. The CRA tops it up, of course. And if you're like Andrea in Quebec, you get the IRS, the CRA, Quebec, Costa Rica, you get it all. That's it. So yeah, it's easy though. You get the report, very easy, you forward it, and you pay.
So, if I lived in Costa Rica and made all my money outside Costa Rica, I wouldn't pay any Costa Rican tax.
If you're making your money outside Costa Rica, you don't pay Costa Rica tax.
So I live tax-free, yes?
Here, yes.
Well,
You still got to pay it home, but yeah.
That's income tax. There's other taxes.
income tax would be tax-free.
Yeah.
Correct. Okay, thank you guys.
You're in Canada, yes.
Yeah.
There's a lot of countries that make money in this way.
Yeah.
Thank you, Francois, Jen, and Tammy. Enjoy the rest of the day, and if you have any questions, you have the cookies and the coffee here. There's our name. You can contact us.
Thank you very much. It's been a pleasure. And we have one